Hi guys, and welcome back to another putting it together video. In this video we're going to be looking at a GU short that was available on the 2nd of June, New York time, New York session. So just looking at the M15, you can see internal breakup structure to the downside taking place here from this supply level here. You can see that the order flow has shifted from here, as this low is lower than this low, which is the low that put in this overall swing high. So we have an order flow shift. So we are now coming up to the supply level that put it in. We've built resting liquidity, which is always nice. I have marked out this demand range down here because this is the demand range that called a change of character. So what you can probably end up seeing is something like this, getting involved here, taking levels out, pushing back, essentially tapping into this before probably having some sort of retracement before a probable continuation. So the reason I have this demand level mapped out essentially is just because if you was in the market, it's a fairly long way down to go. So, the difference in, let's just take a look, right? We have resting liquidity above here. So ideally we would want to be seeing that taken out, which as you can see, it does get taken out. Then we would want to be going on to the 1-2 minute time frame. And we would be looking for a change of character, right? Go to the 2 minute. Maybe it's clearer. Buy sells. It looks like the origin on the 2 minute, but on the 1 minute, let's go clearer. You can see there are two levels that I personally would be looking at. That is the decisional, which is the deciding level of supply, and the origin, which is where the supply originated from. Here we have a change of character. The level which actually changed character from there was, as you can see, this supply range, just covering the highs, 2.2 pips. Maybe add a little bit of spread if you need spread. Me personally, I don't actually have spread. So just 2 pips. No, sorry. 2.2 pips, just covering a little bit of the high, like a couple ticks over. And then just, where are you looking to take out, right? Ideally, I'd want to be going, ideally I definitely want to be going break even after this level gets taken out down here at AR. And taking a little bit of partials, break even and partials, being as though this is the swing leg that put us in here. When that gets taken out, I know now confirmed that order flow has shifted. So yeah, just play price and see what happens. If this level was to go, I would be putting an order on this level also. We'll just see how price plays out. Price has a good reaction, comes back up to mitigate, another good reaction, comes back to mitigate again. Building liquidity in the POI in of itself, so that could essentially get ran. But it's having a good reaction out now. Okay, once this level gets broken, that to me is a minor break of structure. And for that reason now I can confirm this high is protected, right? It's a strong high, which gives me more confidence in trading out of these levels. So if, for example, the liquidity gets sweeps in here and we tap into this level, I would already have a pending order on as we kind of approach the level. If I take a -1, I take a -1. It is kind of just is what it is. I would be looking to partial out profits at these lows anyway, and then risk is completely covered. Yeah, literally if price came back up here, I would look to reassess, wait for a new change of order flow, change of character or whatever, and then get back in, but I don't think it will go up there, to be honest. Okay, it does. Okay, so could potentially be a stop out here. Let's just see. Okay, so from this level, price has changed character, as you can see down here. Now, for most people, they'll be looking at this level right here and be like, oh, that looks so nice. But what did this level do, right? It did nothing. It took no liquidity. Where is the level that took liquidity? Well, if you look at here, you can see the buy to sell. So I would personally be looking at this candle right here, and people said, but it's mitigated. But what about if I go to, I don't know, a 3-minute time frame, for example? Right, you'll have the wick. So I would personally be looking to short from the wick. Have a new order on. Short. Another 2 pip stop. I mean, make it 2.2, the same thing again. Same lows, right? Like nothing really changes. And then if this high right here breaks these lows, then that'll give extra confidence in this entry, because essentially that will be our newfound strong high. So okay, so liquidity cleared. This is our new strong high, which gives me more confidence in this entry. Okay, one thing I can tell you about this level right here is it's very, very liquid. Why is it very liquid? Because this is a continuous build up of mitigations, which we know to be liquidity. Perfect liquidity before our level of our buy to sell. That essentially is putting in these lows. So again, very confident still in that entry as well. If this low gets taken first, that would be great because we'd have profits secured from here. So the risk would be okay, but okay. So TP1 here, 8R. I'll be looking to take off partials, taking off 50%, 40%. I mean, that's kind of up to you. I personally, in this scenario, would be taking off anywhere between kind of 30 and 50%. And the reason is because it does change based on where you are in price. The reason is this level that we're trading out of is just such a clean zone, in terms of it's very well priced. It's part of the order flow. It met all the criteria required. Like it's very probable that this zone does produce the reaction that it is producing. Probably end up taking the lows, but at least into this demand range, right? Because it'll probably give some reaction out of this level. So just taking out profits at the end of the day. We're not trying to be greedy and hit 100 Rs. We just want to make sure we're taking profits out of reasonably logical areas. So taking some profits out of here. Essentially not putting stops to break even though, because if we go to break even and this does get tagged in, which I think it still could, we have more levels of inducement now. I think this level could still very much get tagged in. I mean, if not, we'll know. Okay. We'll know now, right? Because if we've taken this level now and we mitigate something out of here and take out this low, I'll just remove this order and go to break even on this one. Because now it's pulled back. Now it's pulling back 50% of its leg. Looks like it will tag in maybe. Or maybe not. Maybe yes. Okay. Okay. So tag in, and that's a very nice reaction. And oh, look at that. I would be taking partials again on this position in and around this low right here. Makes sense, right? We're just literally trading the flow of orders at the edges, right? It's super simple. Is there a potential to get a scale in here? Well, yes, we're on the 3-minute time zone. What about the 2-minute? Looks like that. 1 minute. 1 minute looks like that, right? Where would I personally be looking to get in? A lot of people will be looking at this level right here, right? But my point is why? This level didn't take any liquidity. In fact, it's sitting on liquidity for me. Where was the level that swept the liquidity, right? So we had a sweep of these double equal highs right here. A sweep of these equal highs into the entry. So a buy to sell. So the overall buy to sell range is this, right? It's this buy candle to sell. How big is that stop? Let's see. Short. I mean, we're set on resting liquidity as well, but short. That's like a 3.9 pip stop. Okay, so take 50% of the range. Why not? Which is perfect, right? 2.2 pips. It's on the edge of the liquidity. It's the buy to sell. If it doesn't get tagged, who cares? But it just does make logical sense as to why it could. Hope everybody understands that there is the buy, that black candle, the buy to sell that took the liquidity. Very big on liquidity concepts. And then just taking profits at this low right here, right? So now we have, for some reason this one's been taken off. One short, 2 pips. Take out these lows, 11R, 9.5R if it gets tagged. I'm not afraid to stack orders. Why? Because I understand the order flow. I understand where I'm getting in price. Again, it might not come back up. It might just be so. Let's just see. There you go. Right. Oh wait. Okay, makes perfect sense, right? We're just essentially coming back to mitigate more levels of, well, the overall buy to sell. Makes sense. Because you just understand price, right? You understand price delivery, you understand the order flow. And now we melt off. That's a lot of momentum to the upside. Okay. And there is your first level of take profit, right? Partials out. Break even. On this one, so on this one I would be going break even, right? Because this now is our edge of our leg. Okay, yes, there's resting liquidity above there, but if this gets swept, then it's all likely to be swept, and it's very unlikely to get swept. So on this one, I'll be going break even. I mean, we've taken partials off the table now to enough of degree that, you know, we've secured good profits. So you want to keep it open, take it off. I mean, it's totally up to you. And then honestly, I would just be looking to take next partials anywhere around this demand range, right? Because this level is bound to have a reaction. I mean, it could come all the way down here, but still, it's this range, this sell to buy here is bound to have a reaction because it took the liquidity, right? Liquidity concepts. So expecting probable sell-off, to be honest. 3 positions, 3 possible stacked positions in here. Price would have came all the way back up into levels of supply, right? Makes total sense. Take out the lows. At which point, if you really want, these can be broke even. You can just put your stops above here. And, you know, you're guaranteeing yourself to lock in 4R if it just does come back and stop you out for the remaining 50 or 30 or whatnot. But it shouldn't at this point. There you go. And there is literally 3 take profits traded to perfection. That for me was just a complete random backtest, whatever you want to call it. Yeah, 42R, 47R, 41R, right? Over 100R in potential shorts there. And as you can see, they do hit all take profit. And that is essentially the power of understanding where you are in price and how to confirm it at the lower time frame. Why? Because this level produced such a reaction, right? And these lows are likely to go, but this level might have a probable reaction, right? Where price starts, I don't know. where price starts coming up. And you're looking at this now and you've seen that we've had an internal breakout structure, and realistically, if I was trading this now, I would be trading longs into, you know, levels of 50% of the leg, or into the supply level up here, because essentially you're expecting the pullback from this level, right? It needs to build more sell side liquidity before it can take it out. So just watching yourself give back, you know, this is running at say 50R and now it's running at 40 and you give back 10R. It just doesn't make sense, right? Don't be greedy. Take your profits and reevaluate the trade, because when you're sat in these trades, all you're wanting to happen is for price to go down. And now you're not able to logically assess that we've had a shift of order flow here and we're pulling back, because you just want price to go down and hit your take profits, right? Because you're in positions. Take profits, reassess, reevaluate, get into new positions, right? As price pulls back, M1 changes of character and levels of demand that caused it, and look at that reaction, right? You can't make this up, literally. So guys, that's the end of this video. I hope you guys enjoyed, and I'll see you soon. Thank you.